A very good morning from Muhammad Ashik Khan. Thank you so much for joining me again, and let's continue doing questions of mock paper 2 of financial accounting, which will be beneficial for all of you. So let's get in touch with the questions. The following figures are taken from the statement of financial position of Gen Company. Inventory, receivables, cash, payables, bank loan, repayable in 5 years' time. What is Gen Company's current ratio? Now, to calculate current ratio, the equation is equal to current assets divided by current liabilities. So we have to accumulate and find out what are the totals of the current assets and the totals of the current liabilities. Inventory is an example of current assets. Receivable is another current assets. Cash is one another current assets, and the payable is a current liability. Bank loan repayable in 5 years' time is a non-current liability. Question is, what is the current? So let's take the total. Inventory 2, receivable 3, cash 1. So inventory 2, receivable 3, cash 1. So the total is 6. And then current liability we have payable. That's how much? Let's find out. That also 3. So therefore current ratio will be 6/3. Is 2:1. So let's find out. Yeah, we have an answer. Second is the second answer is the answer to this question. Question number 14. A particular source of finance has the following characteristics. Fixed payments. So every regularly on a fixed date they are going to repay the money. A fixed repayment date. Finally, we have to repay it on a given period. For example, 5 years, 2 years, or 10 years, whatever the time is. It is secured on the assets of the company. So it has been pledged against any one of the assets, and the payments are classified. And the payments are classified as an expense. So you have these. One is a redeemable preference share, loan note, and overdraft. So the loan note, you see, any additional amount of payments made more than what you've taken is interest, so that is loan note. So that would be the answer. So your answer is loan note because it's pledged. So it's mortgage against any given asset, and any additional payments which is classified as expense is an interest, and the one that you have taken is a loan. So your answer is loan note. Question number 15. Sorry for that. Tom Company acquired 100% of the 100,000 ordinary share capital of C Company for 1.2 million on 1 January 2015, when the return earnings of the C Company were 550, and the balance of the revaluation surplus 150,000. At the date of acquisition, the fair value of the plant held by C Company was 80,000 higher than its carrying value. What is the goodwill? So to calculate goodwill, we have a format as described or prescribed by IFRS 3. So fair value of purchase consideration. We need to take the fair value of the purchase consideration, which is they invested 1.2 million and they acquired 100%, so there is no NCI, that is 0. So 1.2 million here minus fair value of identifiable net assets at the date of acquisition. Where you have share capital 100,000. What else we have? And then return earnings 550, and then revaluation surplus at the date of acquisition 150,000, and fair value adjustment 80,000. All these. Now, what are these actually? The net asset at the date of acquisition. If I draw up a line here, you have three specific dates. This is date of incorporation. This is date of acquisition, and this is the balance sheet date. So to we calculate goodwill on this date. So what we need to see is on this date, what are the available net asset? Net asset is actually equity. Equity comprises of share capital and reserves on the date of acquisition. Those are the items. So we take the total of all this 100 to for 650, 700, 800, 880,000. So 100, 650, 750, 800, 880,000. So that is the total here. And we invested 1.2 million. So difference is 320,000. This is the goodwill. So let's see whether we have an answer. Yes, we have an answer. So with that, I conclude today's recording, and I will have many other video series to come on. Please join hands with our YouTube channel and get benefit out of it. And this is open to everyone. So do subscribe to my channel, like it, share it, and don't forget to press the bell button at the bottom. Thank you so much.